Hi, welcome to a quick look. In this video, I'll be talking about the three key financial statements that reflect any company's financial position and performance. These are the balance sheet, the income statement, and the cash flow statement. Let's think of what all we need to know before saying that a company is financially strong or weak and is performing well. We look at the machineries and plants, the office building, warehouses, cash, loans taken from different sources, the money it owes to its suppliers, its sales, expenses, income, etc. Isn't it? We'll go one by one to know how these are incorporated in the financial statements. To know about the financial position of the company or its capability to carry out its operations, we look at the assets and liabilities of the company. While its plants, machineries, inventories, cash, etc. constitute the assets, the debt taken from banks or trade payables form the liabilities. The statement of financial position is what we call as the balance sheet. This is how a balance sheet looks like. You have assets as well as liabilities. Under assets, you'll find current assets such as cash, accounts receivables, and inventory. Under non-current assets, there are fixed assets such as property, plant and equipment, and intangible assets. Under liabilities, you'll find accounts payable, accrued expenses, and in the non-current liabilities, there will be long-term loans taken from banks. On the liabilities side, you'll also find the shareholders fund, equity because the company owes that money to the shareholders. Now, as the name suggests, the balance sheet is called so because both the sides, assets and liabilities, are equal. In short, we can say assets is equal to liabilities plus equity. A balance sheet is like a photograph. It shows the picture of the company at the time when it was clicked. Or in other words, it reflects the financial position of the company at a given point of time. Let's now talk about the financial performance of the company. When we say performance, we mean whether the business has been profitable or not. An income statement gives an insight of the operations of the company and the profit or loss made over a period of time. I repeat, over a period of time. It may be quarterly, half yearly, or annually. How do we prepare an income statement? Do you remember in schools we read about that shopkeeper who buys an item at a price called as cost price and sold it at Y called as the selling price, with the difference between them being the profit or loss of the shopkeeper. For a company, the total sales along with the other income, which may be through the sale of scrapped assets or interest on money deposited in banks, forms the total revenue of the company. From the revenue, we deduct the costs incurred on creating the product or services sold by the company, called as the cost of goods sold, and other expenses such as general and admin expenses, finance cost, depreciation, and taxes to arrive at the net income of the company. The income statement can be either a single step, the one which I just explained, or a multi step statement where we calculate the gross profit and the income from operations before arriving at the net income. Now, moving on to the cash flow statement. It summarizes the cash inflows and outflows of the company over a period of time. The cash flows help in determining the liquidity of the company, or in other words, the company's ability to pay debt and carry its operations. The cash flows occur from different activities of the business. It can be from operating activities such as sale of goods or services, or from investing activities. This includes the investments made towards purchase of assets or income from the investments made in a mutual fund, or it can be from financing activities. Financing activities may include the funds raised through debt or equity or the dividends paid by the company to the shareholders of the company. The net cash flows from these activities tells us about the cash available with the company to carry out operations or pay the EMIs on time. Hope this quick overview of financial statements was of help. I'll be discussing them separately and in detail in my other videos and will take you through the different components that form the part of these statements. Stay connected.